You're with us here on Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormis Fatakia. With me, Mangalam Malu. Joining us also, as always, Ritu Singh. It's been, par for the course sort of a start for now for our markets. The final trading session before the budget on Sunday. There's some recovery from the lows of the day, but there is still some resistance that's emerging at the 25,300 mark. Mangalam, hi.
Hi, good morning, Ritu. Good morning, Hormaz. You know, the interesting thing is that the market yesterday tested both ends of the range. 25,150 was the low of the day, 25,159 to be precise, and 25,459 was the high of the day. So between 25,150 and 25,450 is where the market has been flitting around. It's a broad range and the market has been choppy, but right now as we speak, it's in the middle of that range. The good part, however, is that the mid-cap index has shown a fair amount of recovery, with 1,800 stocks which are advancing for about 1,000 stocks which are declining. So those crisscross lines have actually intersected early this Friday morning itself, and now the green one is fairly above the red one. Hi, Ritu.
Hi, Mangalam. Hi, Hormaz. Plenty of action there. More than 50 companies reported earnings yesterday. Today, again, we have a heavy news day just before the budget. But I'll also be keeping my eyes out on the macros. I mean, yesterday you had the rupee touch almost 92. It didn't get there, but it was almost there. Today, there's been some recovery. Crude price is another factor to keep an eye out on, given, it almost touched 70 overnight. And the metals, of course, what a sharp correction we saw overnight after that record rally that we've been seeing. So metal sensitives in focus, oil stocks in focus, and of course, it is an earnings heavy day again. So specific companies are going to be reporting numbers and the markets will react to that. So lots, to take away from the markets, the trading session today. But let's start with an important corporate development that's happening in Rossari Biotech. CNBC-TV18 has learned that promoters are looking to sell stake in the company. There's already been some interest as well. Let's go across to Rachna Dhanrajani, who's picked up details on the story and joins in with the latest. Rachna.
Well, that's right. Sources tell us that promoters of Rossari Biotech are exploring options to sell stake in the company amid an early-stage interest from global private equity funds as well as a listed strategic player. Discussions, however, are still at an exploratory stage with no binding offers on the table yet and no final decision taken by the promoters. But what is final is the plan to sell, which is why the bankers have been tapped in and the process has been kicked off. Now, people familiar with the matter say that the move is being driven by a lack of clearly articulated succession roadmap with no visible long-term plan on promoter transition disclosed so far. Rossari Biotech, about the company, it is a major Indian specialty chemicals manufacturer with a strong presence across textiles, personal care and performance chemicals. In the third quarter, the company reported a revenue of 581 crore rupees with a net profit of 32.77 crore rupees compared with a revenue of 512 crores last year with a net profit of 31.70 crore rupees. It is also worth noting that in 2025, promoter Sunil Srinivasan, who's one of the promoters, transferred about 16% of his stake as a gift to his family members and a family trust through an off-market interstate transfer. That transaction did not dilute the promoter holding, but it definitely restructured the ownership. So we will keep an eye out on what goes on further.
Take that point, Rachna. Thanks a lot for that. The stock holding up with about a 6% gain on the back of that news. But let's get in earnings reactions as well. Dabur reported an absolutely in-line set of performance coming in. That's largely because the street had been apprised of these numbers by the company's quarterly update. 6% revenue growth, the EBITDA margins a little over 20% as well. Alongside that, we had a volume growth of 3%. The street was working with a number of 4 to 5% out there. Mohit Malhotra, who's the CEO of the company, joins us now. Mohit, thank you for joining in. Understandably, this quarter had disruptions in October. There was some recovery in November post the GST transition. December offers a cleaner look into how business was. So if you could give us a sense on how the exit rate for this quarter was and whether that is sustained into the fourth quarter or not.
Mangalam, thank you for having me here. So absolutely right analysis, I think, from your end. So the beginning of the quarter started with disruptions as the inventories got liquidated in the trade, which is both at the stockist end and at the retailer end also. There was a high price inventory which went down, and consumers also postponed their purchases in expectation of the low price stocks coming into the market. So we saw October low at a growth of around 4%. As we went into November and December, we exited the quarter at around 7% kind of growth. So from 4% to 5.5%, 6% to 7%. And as we enter the quarter one, in the month of January, we are seeing a growth of roughly around 7.5% odd. And that is both volume-driven growth because we had postponed all the price increases that we were supposed to be taking because the GST reductions had happened here. So, and on account of anti-profiteering, etc., even the inflationary products price increases were actually pushed back from our side.
So fourth quarter volumes could be 6 to 7%, and the next year, after the price hikes of 2% that you take, you can see double-digit revenue growth with high single-digit volume growth. Should that be what the street should work with?
No, I think that's very, very bullish. So I think we look at a mid-single-digit sort of a volume growth because a lot of inflationary trends which we saw in this year, in this fiscal year, are going to get deflationary because we are lapping over the basis. So mid-single-digit kind of a volume growth and around 2 to 3% of price increases might come in. So a high single-digit or a near low double-digit kind of a value growth is what we anticipate going forward, and that's what we aspire to achieve in the more, realistic bracket.
Right. But, winters were delayed and they were harsh. Has that helped the sales of Chyawanprash, etc., in the fourth quarter?
Yeah, so winters have been very severe, and although delayed winters, so Chyawanprash business has actually moved up by around 11% in tertiary. It is not visible in our primary numbers because last year the season wasn't great, and there was old price stock and old stock sitting out there which required some liquidation. So that is what got liquidated quickly because offtakes were very high, and the tertiaries have actually gone up by around 11%. But you're absolutely right, in quarter four, because tertiaries improve, even the primaries will improve in the quarter one. So we will see almost a double-digit growth in Chyawanprash in primary, secondary, and also tertiary.
So what then
all the three,
keeps you...
we seem very bullish about.
So what then keeps you away from, a high single-digit sort of volume growth? Because it's not that the base is unfavorable. For Dabur, I'm looking at the last many quarters, volumes have either been in the negative or, they've seen a marginal increase of 1, 2, 3, 4%. What will it take for Dabur to grow above 5%, maybe high single-digit, and maybe even aspire for double-digit? What are the blocks that you're putting there?
No, so you're absolutely right. So I think first, we are aspiring at a double-digit growth next year going forward, but a low double-digit growth, going from a high single to a low double. That's the kind of guidance which we are giving to the market also for next year. And this will be driven by the pillars and the blocks of growth will be distribution. I think that's very, very key. So the emerging channels of e-commerce and modern trade is a huge thrust on. Even in general trade, which is where we are facing a lot of headwinds because of the consolidation of distribution happening in the country, I think there we are looking at improving ROIs of distributors, increasing the TADAs and the salaries of SSM, etc. So a lot of distribution revamp is what we're looking at. Digital communication for our new age brands. Premiumization is, I think, a big pillar of growth to drive value and therefore exploit the tailwinds of the urban market premiumization happening in the country. So all those are the pillars in place here for driving almost a near double-digit growth next year value.
All right, double-digit value growth, mid-single-digit volume growth, and all this is despite a 2% weighted average hike. Mr. Malhotra, quick question on the demand environment as well. You're talking about the kind of volume growth you're expecting, but between the urban segment where you're hoping premiumization is going to add to the play and the rural segment, what is it that you're seeing on ground? Because the likes of Kantar, for instance, we had earlier on the show a few days back telling us that in the urban market, some of the branded players are perhaps losing market share. It's not that demand there is slowed down meaningfully, but it is the branded players that are losing market share. What are you seeing on the ground? And secondly, with the budget coming up as well, what sort of measures are you expecting to boost consumption from here on, given the what the government has already done with the rate cuts?
Yeah, so what's happening on urban and rural is that we see a depression in the current quarter on account of GST, because I told you consumers actually delayed the purchases in expectation of the new price stock hitting the marketplace. So therefore, we see a little downtrend in urban and rural in the current quarter. But sequentially, if you see month on month, we see the sentiment improving and the numbers also improving, steadily improving. I expect the quarter four numbers for the urban and rural to be both better sequentially, and there'll be a growth in the tune of around almost double-digit kind of a growth, which will hit from a Nielsen perspective. So and the tailwinds of GST are also solidifying now, and the sentiment improving. So we expect a good growth to come in the FMCG sector, and that's why we are backing on almost a near double-digit growth going forward for next year also.
Final question, Mohit, before we let you go. There's rumor on the market that there is a likely rejig at the top in Dabur. Any addition, any resignation? Is there any rejig that we expect at the top of Dabur?
See, Dabur is a complicated business. With 75% of the business coming from domestic and 25% coming from the international markets. In the domestic markets, we want to strengthen the organization structure. So we're looking at some sort of a organization redesign. There's no resignation. There is nothing. We might be adding a position in India to strengthen the organization structure. The rest, the names, etc., are all conjectures and speculations. So I don't want to comment on the same.
By when will we have clarity?
We will inform the market as and when the clarity emerges. Mangalam.
All right, take that point. Thank you so much for joining in and giving us all those details. Wish you good luck, and the street will definitely keep an eye out on the developments taking place at the top as well to strengthen the Indian business. There have been many names doing the rounds as well. As of now, the stock higher by about 1.5%. The management confident of better performance in the fourth quarter than the third quarter. Take a short break, come back. eClerx joins in on their third quarter performance.
Welcome back. Let's go across to Shireen Bhan in conversation with Atanu Chakrabarti, the former Secretary of the Department of Economic Affairs and former Defence Secretary Giridhar Armane, over the key expectations from the budget.
Yeah, because if the industry is ready, they are able to deliver what has already been ordered. The final expenditure outgo is going to be quite heavy, considering the type of platforms which are on order. Apart from that, government have loosened the purse strings for emergency procurement because of the immediate need to replenish the inventories of the three services and also procure certain new age equipment which have been under discussion, but because of the technology readiness level were not being procured immediately. Now the services have worked with the industry, especially the startups, and have generally identified several systems which can be ordered very quickly through EP route. I am hoping that EP route will also bear fruition this year, increasing the total expenditure in both non-salary revenue as well as capex beyond what was happening in previous years. If emergency procurement also comes to quick fruition, the last round and the current round, the number can be quite substantial.
Yes, and we do have to factor in the emergency procurement that you spoke of, because the replenishment of inventory post-Operation Sindoor is something that the government will focus on. Mr. Chakrabarti, you've got your little black book there ready, sir. What are the key numbers that you're going to be watching out for, and what do you believe the government is likely to prioritize given the global mix and the domestic needs?
As always, I have, Shireen, looked at the fiscal deficit number, which in a sense captures the entire expenditure and revenue side both together. And of course, the growth, that's what would bring employment. And of course, on the other side, on the monetary side, there are interest, inflation, so on and so forth. So those numbers are key. However, from this budget, I would be looking at growth, which estimates have already come out, as well as the fiscal deficit number.
So, on fiscal deficit, do you believe that they are going to maintain the glide path? And an important change that we're also going to be making in this budget is moving from to debt to GDP, and that is something that the government has stated as its intent.
Government till now has kept up. I must say they made a very bold statement before the election of bringing down the fiscal deficit. And they have kept up on the glide path, but seeing the little bit below expectation performance on the tax collection, possibly.
Counting down to the all-important budget presentation on Sunday. Just before we move on, pull up the market again is heading back towards the lows of the day. Is the index 25,250 is where we are now at. It's similar levels to where the recovery began, somewhere around 930-ish. So 170 points lower now on the index. But moving on to corporate conversations, continuing with that, eClerx, it was a steady quarter for them this time around. The board has also proposed a bonus issue. We are now being joined by Mr. Srinivasan Nadadur, the CFO of eClerx, on the show to discuss the road ahead for the company. Srinivasan, good morning. Thank you for joining in. In your earnings call, you have highlighted that the fourth quarter is going to be slightly softer in comparison to the third one. What are some of the concerns that you are currently facing that might lead to this softness in the fourth quarter, and what does that do now to your top quartile YOY growth figure?
Hello, and thank you for having me on the show. So I think given that we are reasonably small in size, volatility from quarter to quarter is not unusual. So we don't see any long-term change in the demand environment or in the pipeline that is building up. So that is healthy. And this probably is just a one-off. After 2 or 3 quarters of good growth, we are maybe seeing a little bit of a slowdown. But the medium-term and long-term prospects look intact.
All right, medium-term outlook is intact, but let's talk about your annual contract value as well, Srinivasan. Wins have moderated slightly in this quarter after what has been a pretty strong run. Is it just a timing issue, timing of the deal closures, or are discretionary spends coming down as well? And the average deal size you're seeing today versus earlier, and segmentally also, if you could break up for us, BFSI, for instance, has been slower. When do you see a pickup there?
So on BFSI, I think the clients that we have, they were all done well. They have reported good results. BFSI growth has been slower as compared to the other segments, but we expect that growth to pick up soon. Again, the deal closures, the last 2 quarters, I would say, have been very, very strong and much higher than what we were able to do in Q1. And I think that trend should broadly continue.
And on margins, Srinivasan, I mean, they've come off about 120 basis points sequentially. Your guidance is 24 to 28% for FY26. Do you still stand by that? And going ahead into next year, how much of an improvement can we see from these levels?
So we still stand by the 24 to 28 band for the full year FY26. On FY27, the budgeting process is still underway, so we've not come to a conclusion on what that band will be. But we'll let you know as and when that process gets done and we're able to, we'll share the figure with the market. The reason for the decline in quarter-on-quarter margin is predominantly the provision for variable pay and bonuses. That's because the growth figures have been quite high, and there's been a slight increase in travel and marketing costs.
Mm. So, but do you believe that the margins where they are currently, is that a sustainable range, or do you see a move in either direction, or is a very broad range, of course, but do you see this as a sustainable range?
We think it is sustainable. We should be able to maintain this.
Mm. What about client additions then? For your European client additions, it's been slightly slower compared to other geographies, even in terms of growth as well. Europe was almost flat. North America did fairly okay. Rest of the world was over 20%. What's happening in Europe? Are you planning on doubling down on the presence over there?
Yeah, you're right. European growth has been slow, and we have a couple of open positions that we want to close there. We do want to move away from North America specifically as a geography, while that continues to be the base, but we would like to expand on Europe as well as the rest of the world. So there are plans to double down on Europe.
Right. And what about cash on your books and the plans that you have with that? You've announced a bonus already. Anything else that, one can look at in terms of rewarding shareholders or at the same time making any sort of acquisitions when it comes to Gen AI? Because the street was worried about the impact of that on your business.
Right. So we just completed a buyback of about 300 crores in the last quarter. As you rightly pointed out, we've announced this bonus. So these are the two means that we are using to reward shareholders for now. I think additional payout may come later in the year. And as far as acquisitions are concerned, I think we continue to look out for opportunities, and whenever we find something suitable, I think we'll make the move.
All right, Srinivasan, we'll leave it at that. Thanks very much for joining in to help us decode your third quarter numbers. And we hope to have you back after your fourth quarter numbers as well. On that note, we're going to shift focus to what's happening in the bond market. And it's time for a segment, The Bond Street. I mean, clearly, the bond markets are heading into the budget on edge. There is one big question on everyone's mind, and that is how much more bond supply is really coming to the market. Now, government bond borrowing, if you look at the market gross borrowing, it has steadily been climbing in the past few years. Not only is the central government borrowing more, even states have sharply increased their market borrowing. So from about 16 to 17 lakh crores in FY22, the total center plus state borrowings have now risen to almost 28 lakh crores in FY26. And the estimates suggest it could touch nearly 29 to 30 lakh crores in FY27, a record high, with about 16.3 lakh crores coming in from the central government alone. Now, that is a very, very sharp jump in bond supply, and that means more bonds chasing the same pool of money, and that's keeping the yields elevated. So traders are watching the budget very closely for two things: the gross borrowing number and the fiscal deficit glide path. That's why you're seeing the bond yields, remaining sticky at around that 6.7% kind of a level, which is at an 11-month high. Now, that is as far as the macro picture on the bond market is concerned. In the primary market action today, at the top end, you had AAA rated names continue to borrow at relatively tighter spreads. So Dabur raised nearly 6,900 crores at 7.27% yield, while Summit Digital priced the 10-year at 7.45%. But as you move down the rating curve, costs also rise quickly. AA issuers are paying about 9 to 10%. A and below are seeing double-digit yields as well. So you have Saturn Credit Care, almost 10%, and some lower-rated names paying as much as 11 to 12%. So that's clearly showing you the risk appetite is pretty selective. And until the budget provides some clarity on the supply and the fiscal math, expect the yields to stay range-bound and volatile, with investors demanding higher premiums for anything that is below the top-rated players. So that's as far as the bond market is concerned. We'll slip into a short break now, but more on the markets and stock-specific news when we return.
Still at 25,250 for the index, but earnings reactions and ahead of numbers. Stocks moving around in the broader markets. You look at Hindalco, numbers coming out later today, stock down 8%. Of course, that is in line with the broader sell-off that you are seeing in the metal prices across the board. So 8% lower on Hindalco ahead of its results. Also 8% lower is Deepak Fertilizers. Numbers came out yesterday. The stock is now at the lowest point of the day. 8.5% lower is Deepak Fertilizers. South Indian Bank is one name that was down almost 18% in early trading. That stock is seeing a bit of a recovery from the lows. Still down 13, but not down 18, at least, as it was at the start of the trading session. But the market still trying to fluctuate between 25,250 to 25,300. What are the FNO trends indicating? Mangalam has hopped over to the FNO desk to tell us just that.
Well, the market's currently at the low point of trade, but it's been so volatile all through today's trading session. At points seeing some sort of recovery, those recoveries getting sold into, and none more volatile than the mid-cap index itself, which is currently at the flat line, but, does not hide the sort of volatility that we've been seeing. Just as we speak, it's moved into the green marginally, and the advanced line has a story to tell too. All of this is reflected in the kind of up move that we've seen in the India VIX. And ahead of the budget session, obviously, we do see, the VIX usually move higher. This time around, it's unusually calm. It's around that 14 mark. We've seen it, ahead of budget sessions move all the way up to 18 and beyond as well. But over the last 14 days, the increased volatility in the market has taken the India VIX higher by about 22%. Today, it's the metals which are coming in for a fair amount of long positions being unwound. Mind you, there are no shorts being added yet, but a lot of the longs have been unwinding their positions after the sell-off that we saw overnight in base commodities as well. Whereas the FMCG stocks, they're fairly well bid. Remember, they had taken a nosedive over the last few trading sessions. The results haven't been particularly bad, largely in line with expectations. And now the stocks are moving on the way up as well. The Nifty, by and large, within yesterday's range of 25,450, which was yesterday's high, and the day's low of 25,159. And that's where option writers believe the market will move today as well. And the reason why I'm saying today and not the expiry is because in the middle of all of that, we do have the budget event as well. So look at the 25,300 call and the 25,500 call. Both of them having premiums of nearly 150 to 200 odd rupees. 185 for the 25,300 call. The 25,500 call comes up for you. That has about 100 rupees on premium as well. Again, that tells you around 25,500 to 25,600 is where resistance comes in. And the 25,300 and the 25,200 puts, both of them equally active. 25,300 put has a premium of 200 rupees. Again, 25,100 is an important support. 25,200 put as well, premium of 175 rupees. 25,000 important support. All of this ties in with the support and resistance coming in from the technical space as well. The 200-day moving average of the Nifty, 25,185, that's an important support. On the way up, 20-day moving average, 25,700 thereabouts is where the resistance kicks in. So the market is in a range, a broader range, and fairly choppy ahead of big events.
Fairly choppy ahead of big events, as is the case, right? And we're now what? It's now further below, now 180 points down on the index, 25,240 is where we stand. Take a break, continue corporate conversations, joined by the management of Indegene on the other side. Stay tuned.
Welcome back. Indegene is the next management that's joining us on the show today. The stock is higher by nearly 5% following the company's third quarter results declaration. Suhas Prabhu, the CFO of Indegene, is with us now to decode the earnings. Suhas, thanks very much for being here. Let's start with your revenue growth, the sharp 30% growth that you've delivered. What has happened is also in the second quarter, you've had two acquisitions consolidating. So first, tell us how, Biopharm and Warren, these acquisitions, how they've integrated so far and how much of your revenue growth came organically and inorganically. What was the contribution from these acquisitions?
Firstly, good morning and thank you for your invite today. This has been a fairly interesting quarter. It was our first $1 million plus quarter with the growth being 30% plus quarter on quarter, 17% plus quarter on quarter, 30% plus year on year. And even the ex-Biopharm, which was the material acquisition, we have grown significantly, 5.9% quarter on quarter and 18.3% year on year. So this has been an exciting quarter for us on various fronts.
All right. Suhas, in terms of geographical divergence that we're seeing in your earnings, North America has seen a 19% sequential jump, while the India revenues have fallen quite sharply, 34% in fact, quarter on quarter. I mean, what's going on here? Are you deprioritizing India? What are you seeing in the other markets? And how do you see this geographical growth playing out going ahead?
That's an interesting observation, but it is also a factor which is both impacted by internal as well as external factors. Internal factor, which you already mentioned, the Biopharm acquisition, which we concluded in October of this year, is a US-based business entirely catering to the US market. And naturally, that reflects in the growth or the higher growth in the US part of our geographical segment. More importantly, our business is working with these global pharma at an enterprise level. And as more and more centralization happens, there would be a shift of the origination of this business to US and Europe, which continues to be in that 97% region, given that most of our business comes from the global innovator pharma, which are headquartered either in US or Europe.
Suhas, you mentioned 30% this time around and 18% you mentioned was organic. But does that rate of growth remain sustainable, both in terms of the acquisition assistance and the organic route as well? And going forward, where is the area that you would want to lay your emphasis on? You've already made 2 acquisitions recently. Are there more in the pipeline, or would you focus on first consolidating these acquisitions and then looking out for more?
As you rightly observed, there has been a strong momentum even on the organic growth front, both in the last quarter continuing into the current quarter. Our deal momentum has also been significant. We've had 3 customers with about 7 contracts, each exceeding $1 million per annum, and a couple of them aggregating per customer to $10 million per annum new business. And therefore, we believe that the organic growth momentum would sustain going forward. Having said that, inorganic adds on top of this. And the main reason for the inorganic forays at Indegene is not financial bulk up, but adding and integrating near neighborhood capabilities and going deeper with our existing customers. And we believe that we are well poised to be on that path through these acquisitions. And finally, winding up, there is, while we continue to scout for targets, in the near future, we do not see any deals that would close, which would add any significant inorganic growth to these numbers. Finally, a caveat, Cake Communications that we signed in December of 2025 will be closing anytime in this quarter, and that would add a bit of inorganic growth to the next quarter revenue.
How much would that be, if you could quantify that?
It's a very small, non-material transaction.
What about brand activation? I remember it was low double digits of your sales contribution, and you had a fair amount of push out there as well. What's the outlook here?
So the brand activation business was about a little under 8% of our revenue. The brand activation business, of course, led to the start of our new foray, where we went upstream into the customers using the enterprise engagement model. And therefore, we have started looking at this in a combined manner, and therefore we have combined the segments in our financials. So I would look at this as the starting point using brands and transforming that into enterprise engagements, which are much more sustainable and longer term. And that is where we are seeing the growth coming from.
Okay, Suhas, you had 2 deals in this quarter that were more than 10 million annual contract value and 1 deal of more than 5 million. What is the pipeline looking like? And, will we see more of these larger deals versus the smaller one? And also the visibility on, the big wins. What is the revenue ramp profile like?
Yeah, so we have an encouraging pipeline build-up also, other than the conversions that you spoke about. Many of these are in the nature of transforming our customer operations, both on the medical side and on the commercial side, introducing Gen AI into the way of work for our customers. And therefore, we believe that we have a good pipeline as we head into the future.
Suhas, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. Take a short break. Just as we do that, the countdown for Budget 2026 is underway. The most influential voices decode and analyze the impact and policy decisions from the Finance Minister. We bring you a power-packed lineup all through the day of the budget. Market veteran Ramesh Damani and Helios Capital Sameer Arora for all things market, followed by JP Morgan's Sajid Chinoy to discuss the macro signals. Also getting you insightful analysis from our industry veterans, and of course Dinesh Kanabar and Ashok Wadhwa for the tax rhetoric.
Welcome back. Let's get back to the conversation that Shireen is having. Shireen is in, conversation with Anand Goenka. Actually, let's cut across.
Double digits growth, 20-25% kind of levels. And when I speak to colleagues in the industry, even in our pre-budget survey that was done, we're seeing a clear desire for increased private capex. And I think this is the time where utilization levels have moved from about 75 to 80+% levels. And I'd say 80+% is the threshold where private enterprise will look at capex.
So capacity utilization, you're saying at above 80%, and so the need for fresh capacity, at least in some sectors, that's warranted today?
Absolutely.
Anand, I know you have to leave for an urgent meeting, so let me very quickly get two more questions in with you before I come to Naina and Shubhrikant. And the rupee, and we've been discussing what choices the government can or should make at this point in time. But as far as the industry is concerned, how is it starting to impact the decisions within the boardroom?
I'd say that one is it's certainly making exports more competitive. And I've always said that as industry, we need to be more globally focused, look at solving customers' problems outside of India as well. And this is a great opportunity where you're getting far more competitive globally because of external factors of the rupee. So to that extent, I think we must look at exports. Of course, imports become more expensive. But at the end of it, we have to take advantage of this opportunity, combined with which you have the FTAs that are now being signed with various countries. So this is the right opportunity to leverage the FTAs that are there and look at solving global problems by exporting and setting up international centers.
And part of that, in anticipation of the FTAs being operationalized, do you envisage more FDI into the country, especially joint ventures with European companies who are looking at expanding or getting into India? Do you believe that that is likely to be a new catchment area, an opportunity that we should focus on?
Absolutely. I think this there's a lot of complementarity that is there between Europe and India, or the developing world and the developed world. They have the technological capabilities, high-tech manufacturing. We have a great talent base and a future manufacturing base. So to that extent, that complementarity lends itself very much to partnerships, joint ventures, or even direct entry by European or developed market players into India.
Okay, so he's probably rushing off. Are you going to sign off on a check to add capacity somewhere, Anand? Well, thank you very much for joining us here this evening. Ladies and gentlemen, a big round of applause for Anand Goenka, the president of FICCI. Thanks very much for joining us. We'll continue our conversation with Naina and Shubhrikant. Naina, let me address the issue. You of course, seen many...
Welcome back. Let's get straight to our special segment on the macro signal to give you the big cues of the day. Let's start with the markets again. I mean, there was a bit of a recovery. It's been a volatile session ahead of the budget. Now again, the markets have slipped into the red. The Nifty is trading with cuts of 130 points. The Sensex with close to 400 points. That's where we're at. Bank Nifty, which had briefly touched that 60,000 near that level earlier in trade today, is now back at 59,784. That's where it's at. Now, as far as the rupee is concerned, that is now at 91.91 today. Remember, yesterday it had touched a record low of 91.99 because of oil prices increasing, some of the concerns about foreign outflows, etc. continuing. Today, it is trading a tad stronger while the Asian currencies are trading mixed. currently now at 91.91. Now, the 10-year benchmark, it closed stable yesterday, awaiting the budget announcement. Today, it is a tad higher, now at 7.61%. And we told you earlier today, it is the oversupply concerns with the large government borrowing expected today to be announced in the budget that's keeping the yields higher. Oil prices, interesting move there. It was a 6-month high amid the US-Iran tensions. Now just about, below the $72, dollar to the barrel mark, 69.83 is where the Brent is at. That's as far as the macro signals are concerned. Back to you guys in the studio.
All right, we take that point, Ritu. Thank you for that. That's the macro signal that we're tracking. But the micro signal that we're tracking are a bunch of these stocks which are underperforming right now. From the highs, Sanvardhana Motherson has seen a gash, and CG Power at the low point of trade as well. The market holding in the same range. What we'll do is leave it to the team of Halftime Report to take the next hour forward. Thank you for watching.